Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets, talking about some of the key events that are coming up this week and how they might shape the price action. So let's jump straight into it. We're pretty much seeing a pretty quiet start to the week for US markets. US markets are kind of half closed today for a public holiday, like the bond markets are shut, but the stock market is still open. But a lot of market participants in the US will be taking the day off. So you can see here that the S&P 500, or this is a CFD which tracks the S&P 500 futures, a little bit lower on the day, minus 0.24 or minus 0.2%, so basically flat, sort of hovering just above those annual lows. We had this big drop on Friday because recall that we did have that US jobs report that was pretty robust, okay, and very much supportive of the case for continued aggressive tightening from the US Federal Reserve. And like I said, it's going to be a busy week in the for US markets. So seeing a bit of consolidation on Monday, we haven't really got anything on the calendar today, is not really too surprising. In terms of currency markets, you can see the Dixie continues to press a little bit higher. It's probing that 113 area, still garnering support from that strong jobs data and continued expectations for a hawkish Fed. And then you've got things like oil as well, which has pretty much stabilized close to recent highs. As you can see here, it actually was in this downtrend and seems to have broken it to the upside. Thanks in most part to this larger than expected cut to oil output that we got from OPEC last week. 2 million barrels per day they're reducing their output target by, which was more than what people were expecting, which seems to have saved oil from further near-term downside. Like, was it not for OPEC, I think we would have been making progress in oil towards these lows in the 60s. Now, I think we could still eventually get there because of growing expectations for a global recession and a deteriorating global demand outlook. But for now, OPEC's latest move seems to have saved things. Whether we can hold above 90, I'm not sure. Whether we can get back to this 200-day moving average and resistance area, sort of closer to 100, I'm not very confident that oil prices can do that. But anyway, back to the week ahead, because like I've been saying, it's going to be a busy one for US markets. Let's go through things chronologically. We've got a smattering of Fed speakers throughout the week, starting with Mester and then a couple more like Bullard. Actually, Bullard's on Saturday. Fed minutes as well on Wednesday. But the main thing I'm going to be looking at this week is the US CPI data on Thursday. And actually, we're going to be getting the PPI data before the CPI data, PPI on Wednesday. But markets are going to be mostly watching this CPI data. And you'll remember that last month, the core CPI was hotter than expected. It came in at 0.6% month over month and higher than expected year over year. And that spooked markets. The core price pressures are too high, and the Fed might have to do more than a lot more basically. And actually, just looking at the Fed futures expectations pretty much for where the Fed's interest rate is going to be, prior to last month's CPI data, rates were seen peaking at about 4% next year. Now markets are pricing in rates peaking at about 4.6%, and that was pretty much all triggered by this CPI data. Obviously, strong jobs data, other strong economic reports have also helped push that up. But yeah, this CPI data is huge, and if it causes another big jump in Fed tightening expectations, perhaps say to 5%, I'm not expecting that that's going to happen, but if it did, you could potentially see, first of all, fresh annual lows in stocks, and second of all, further upside in yields, which would push up the dollar. And if we saw another very, very hot inflation report, hotter than expected, then I'd be expecting a break above this area at some point this week. Otherwise, what else are we looking at? US retail sales data. How is the consumer holding up? And then we've got this preliminary University of Michigan Consumer Sentiment Report, the most important part of which, at the moment anyway, because there's so much focus on inflation, is the inflation expectations part of it. Outside of the US, we've got US GDP, UK GDP, sorry, a bit of speak from the ECB, like we've got Lagarde coming up, Bank of England governor as well. So there's a smattering of other things, but it's mainly a week for US markets. And another big thing that investors are going to be watching this week is the start of earnings season. A bunch of big US banks coming out and issuing their results on Friday, basically. So that's another thing to be looking out for. But anyway, guys, I hope you enjoyed the video. Hope you found it helpful, and I will see you all in the next one.